Hey everybody, this is Chen with Trader to Be, and this is a tutorial on understanding the intraday timeframes of trading stocks. Intraday timeframes can be broken down into pre-market, initial opening, morning session, lunch hour, afternoon trading session, closing hour, and then after hours. The pre-market trading session is characterized by any trading activity that takes place before 9:30 a.m. This is highly dominated by institutional trading. It's not uncommon to see companies listed within the United States stock market release their earnings report prior to the New York stock market opening. In addition to this, you may also experience a lot of macroeconomic activity taking place prior to the New York stock market opening, such as like a major economic data report that's being released at 8:30 or a central bank speaking event that takes place at 9 a.m. It's important to take note of these key events because they will affect the futures indexes, specifically the indexes on the E-mini S&P 500, which trades 23 hours a day. As the market participants are digesting these news reports and the earnings from companies, they will take bets on the futures index, and the direction that they're taking a bet on will affect which way stocks and ETFs trade at the 9:30 opening of the New York Stock Exchange. Moving on, we have the initial opening. So the initial opening is characterized as 9:30 a.m. to 10 a.m. This time frame is the highest trading volume and volatility we'll experience during the day. In addition to that, you will also experience a lot of algorithmic trading, high frequency trading, portfolio managers, fund managers, discretionary traders, and retail traders are all active during this specific time frame. This adds to the additional volume and volatility that takes place. The initial opening balance establishes highs and lows and gaps from the previous day, and this information can be used in market profile to establish trade setups that you can take on throughout the day. So an example of this is by taking a look at this specific time frame from 9:30 to 10 a.m. We can take note of several key things that happens during this specific time. Here we have the previous day's closing price, and then we have the gap opening. In addition to that, we have the highs of the day being established and the lows of the days being established. And this information right here creates several key levels that will give us a significant amount of information and trading decision we can use when we position ourselves to take on any particular stock. So moving forward, we have the next trading period is the morning session. And this is characterized by 10 a.m. to 12 p.m., where high trading volume and volatility begins to dip off as we get closer and closer into the lunch hour. Discretionary traders and retail traders are highly active during this phase, although it's not uncommon to see HFTs, algorithms, as well as some fund managers also participating during this time frame based upon their style and their mandates. In addition to this, we will get confirmation of the day type being established through a series of trending markets or reversal markets. However, a ranging market may not become evident yet until much later in the afternoon. And so we can take note of this by analyzing this specific time frame here on this chart and looking at the time frame from 10 a.m. to 11 p.m. afternoon. And in this specific time frame, we can take note of several key things that are happening here, especially since the lows of the days has already been established. We can see that the market comes back up and buyers are active, pushing the price back up, but then resistance is felt and then price is pushed back down and the previous lows of the days are broken and a new low of the day is set. Also take note here that once this level is broken, the previous lows of the day is broken, you can also see additional volume jumping in. Furthermore, once the lows or the new lows of the days has been set, you can see that there's a bounce in the markets up here, and then that wave comes back down, and then this point here becomes key in the sense that it was unable to retest the new lows of the days, and a new series of buying comes in, pushing the price back up to here by noon time. So it's important to take note of several key things here, specifically the volume that's beginning to come off as we get closer and closer into the afternoon session. In addition to that, we can also note that as we get into 11 a.m., we can begin to see volatility beginning to die down as well. So moving forward into the next trading session, we have the lunch hour. The lunch hour is characterized by 12 p.m. to 1 p.m. This typically shows the lowest trading volume and volatility during the day. Retail traders are often dominating this particular time frame. The reason being is because most institutional traders are either off on lunch, or in the case of European traders, especially European equities traders, these guys are mostly closing out of their positions and heading home for the day. And so when we analyze the charts, we can see in this specific time frame that the volume begins to really die off, in the sense that when we take a look down here, we can see the lowest trading volume taking place during the day. In addition to that, it's not uncommon to see a lot of doji candles where the market experiences a lot of indecision on the price. Moving forward, we have the afternoon trading session. The afternoon trading session is characterized by 1 p.m. to 3 p.m. You have moderate trading volume and volatility taking place. You have a lot of retail traders and discretionary traders that dominate this particular time frame. Although, again, you may have HFTs and algorithms trading, as well as some fund managers participating in this time frame based upon their mandates and their trading styles. Finally, the day type confirmation will show itself by this time, which we can then begin to take note in this particular chart here. As we can see within this particular time frame, from 1 a.m. to 3, from 1 p.m. to 3 p.m., we can note that several key things are taking place here. Number one, we'll note that volume begins to pick up into the last closing hour trading session. In addition to that, we can take note that a new level or new range was set based upon the lunch hour. And as we can see, the market begins to dip back down. Buyers come back up, making for a second push here. Although it wasn't able to break the absolute highs of the days, we can get a sense that the market is doing something like this on the day. And then because it wasn't able to break that last point, we can see that the market begins to come off again. Right. One key thing to note here in this particular trading session is that volatility begins to pick up again. So we can see volatility picking up again and momentum picking up again in this particular trading session. Moving forward into the closing hour, this is characterized by 3 p.m. to 4 p.m. time. You have moderate to high trading volume taking place. It's not uncommon to see a lot of day traders, portfolio managers, fund managers rebalancing their positions. In the case of day traders, any open positions need to be closed. In the case of portfolio managers, they may close or open positions based upon their mandates and what their needs are. You do also have a lot of algorithms and high frequency trading taking place as well. And when we analyze this, we can see that in this particular time frame here, from 3 p.m. to 4 p.m., we can begin to take note of several key things happening here. Number one, we can see that volume begins to pick up, especially near the end of the trading day. In addition to that, we can also see volatility picking up as well. And finally, we have the after hours trading session, which is characterized from 4 p.m. and onwards. This is typically dominated by institutional trading. You may also get earnings reports that's released after the market close as well. And what makes this particular trading hour important is that any earnings release that gets released after hours, again, will affect the indexes which trade 23 hours a day, and whether or not the expectation on any high beta stocks misses or beats expectation, they will exert influence on the indexes, and the indexes will then be a precursor onto what the sentiment is or will be for the next trading day. So, in conclusion, understanding volume and volatility and how it is affected by the intraday timeframes is very important for helping you set up your trades. In addition to that, looking at pre-market and after-hour markets to give you sentiment on the upcoming trading day will give you an edge and make you understand which way the market is going much better. And then finally, understanding day types and how these day types will materialize or begin to materialize during the morning session and then transform through late afternoon will basically help you better understand how to position yourselves in the markets for success. So, hope you guys find this video useful, and I'll talk to you guys next time. Bye.